Hello, West Pacific Market Analytics, and it's Glenn here with the 2026 Market Outlook, both economic forecast as well as looking at the analytical data models. Get ahead of the wave. And that's the first thing I want to say, and I want to start by saying get ahead of the wave, ride with West Pacific Market Analytics, catch that wave, be out in front of the trends, and I want to wish you all a happy new year as we end this long weekend. Definitely wanted to come out here into the new year because I want this to be a forward-thinking type of report. Let's put 25 behind us. It's over, it's gone, and let's focus about what 2026 is going to present in the data. What is possible and what is not. And that's what's going to be really important as we go forward. So let's not waste a lot of time. Let me just finish that if you want to get a hold of me on the Discord memberships where we're going to be running this video off of. We run all our videos off all the models that are posted in the Discord area. I don't share all of them, but this report we're going to get a little bit more in depth today because it's important. If you want a podcast, you'd like to have me on a podcast, be very open to speaking with you. And if you've got a family office or anyone that needs a top-rated analyst that does absolutely out-of-the-box thinking to be able to back up your analytical team on a consulting contract or even if you work full-time within your organization, feel free to get a hold of me, again, at destinytrading@gmail.com. So let's not waste a lot of time here. We don't want to waste it talking because we just want to look at the data. We want to see things we don't want to hear. It's more important we look at the data. The data has the opinion, not what we think or what we hear, only what we see. Again, the disclaimer, these updates are for educational entertainment purposes only. Capital at risk, obviously, is always crazy within these markets, so be aware, read it, and be aware, we are not a professional investment advisory service. We are just here to share data with you to help you in the process of what's ongoing in these markets. So let's jump right into it here. Now let's start out, I think, with AI, because I think I want to show you, and I've been talking to my group about this. Let's get up here to where I posted some stuff here over the holiday weekend. Let me see where we start off. Now I think it's important. Let me show you why. First of all, let's jump. Let's stay here a moment. I was just thinking I want to show you the top 10. Well, yeah, let's do that really quick here. So if we go into the top 5 stocks, I'm going to show you a model here where you can see the data shadow. So you notice the velocity coming out here back in 2022 and then eventually rising back up. So you can see we do not have really that much strength here in the top 5 stocks, which are, about 18% of the S&P. We could push that up to about 20%. So we can see the price kind of rose up here within this void. Now, I think that's important because let's go now back to the AI and then let's take a look. The AI model composes those five ones we just looked at. So we've got Meta, we've got Apple, we've got NVIDIA, we've got Amazon, and we've got Google within this, Microsoft even here, and we've got Google within this mix. So you can see that basically all of these, Google is not in the top list of the particular AI model, but it's in here. Further, oh, there it is, excuse me, Alphabet, which is about 2.8%. Yeah, so the top 5 is in this list, right? But we're adding things like Palantir. We're adding in, obviously, a lot of the key components like Broadcom, which is in the top 10 of the S&P. If we take Broadcom and throw in some others, there's a few financials in here. But you can see this model, including Tesla, which is in the top 10, are all within the AI model. So if we come down here, let's look at this one model where I'm trying to show you this, where I was making that comparison to the top 5. Here, I put them back to back so we can see them. Again, you see here's that data shadow, right? But notice what happens when we go into the artificial intelligence model. You notice that we no longer have a data shadow within the channel. You see how we have the trend here. We have a much more exposed velocity build, and thus you can see that the broader base, not just the top 5, actually are what are driving this market. So it very much has to do with this artificial intelligence blow-off or this rally we've had out of the 2022 low. Now, what's going to be important is to focus on this AI model, which is going to include all those companies. And we can see right here, if we key in on it right here, we notice now that at this last low here, this low right here is the 2022 low, the April 25 low. And then notice we still have velocity ongoing here. So it was kind of flatlining, but really it was still rising. And now you notice as we head here into 2026, right here, you'll notice now that the velocity has topped out. And you notice that we have topped out here on the AI model right here back in October or November. And we're right topped out on the mock, which is breaking down already. So price can't go any higher here. It's just this big topping formation ongoing. You notice now that the trend is beginning to break. And you can see how it's all just kind of hanging up here. So we're really going to want to watch that. It's going to be really, really key here. And what's interesting, if I go over here to the generative AI model, which is different to that overall AI model, because this is composing a little bit different segment, you can see how we're floating now right here. Starting right about here in September, we broke out of this very aggressive looking downward swooping V channel. And you notice now that the velocity is coming out, the trend's coming out, and it looks just all hanging out here into December, where we had a lot of holiday-based trading. So even the generative AI model, which is different to the overall AI model, looks very toppy. And we can see here in the AI model that we finally came all the way up here to hit the black line. And you'll notice here that it's got a very solid looking diamond formation. And a diamond formation can be a head and shoulders, right? Because, you know, you can draw a diamond when you have a small head and shoulders top like this. So we got the right shoulder. You notice how we sold off the top, and then we had to rally back up here in December to form the right shoulder. So this looks very, very solid to be talking about some sort of formation up here. Now, let's not use that top word. But in a lot of the models, it looks like it's ready for some profit taking. We're just going to have to see. But you notice here we got the signal roll over here in November. And what I want to see, you notice in this box I've drawn right here, you see all this blue. This is the cash flows. This is the money flows coming into the market. And you notice how it was red here as we then turned blue here, and then into this entire rally starting back here in May of 2023. So what I'm going to want to see is I'm going to want to see change within this box. Now that doesn't mean we got a top here, and you can see we got the bearish crossover here on the V channel, and you notice this starting to build down here, and you notice here how it built down when we had that last sell-off out of the start of 2025. So we've got the same setup. Now, it's not going to be able to drop as quick because we're going to be held here by this dark blue line. This dark blue line will control price, but we're going to have to see how it sets up. So we're getting there. I mean, we look very, very good on this. Again, as this begins to have a sell-off, we're going to have to see how the flows develop. So I really, really want to focus on the AI model going forward. And I don't want to use the AI model too predictive of price. We'll talk more about that as we get on forward here. And we can see even CrowdStrike here, same type of setup. I didn't put a lot of the individuals here because I'm trying to do a year-end report. I didn't want to bring in all the AI stocks. We'll do a separate AI report here probably in the start of January, looking at just the top AI stocks. But you can see we have the same idea, right? You notice here back at the 25 low, which is right here, even on CrowdStrike, see how the velocity was still building. So I want to watch some of these. I'm probably going to put 3 together to put into a more key report, which I think will time the market, because you can see into that sell-off we had in early 25 to that April low, the CrowdStrike velocity was still building up. Now you're going to get these data shadows because obviously CrowdStrike hasn't been trading that many years. It has, but it really hasn't. You need a long, long time to look at that. But it's still accurate in showing current flows. Now it's kicked in. So you can see we got this flat line. I drew it right here. Velocity has been topping the entire year of 2025. Look at that. 2025 right here. See it? A full year topping in velocity, and it looks ready to roll over. So I say CrowdStrike looks done up there. And we'll do that, as I said, we'll look at that a little bit more later. So let's jump out of that, because what I want to do next is I want to pop over here into what I call the global models, because I think this is important, especially what's just happened here in Venezuela. And I find that really interesting, because let me just bring something up here. First of all, I think we've basically got a situation between you and I now where there is so much underneath the cover here ongoing. This could involve, obviously, there was a lot of talk that Venezuela was getting ready to price their entire oil reserves, which are the largest in the world, even above the House of Saud, in not only in yuan, but they were going to price them in gold. So, that is just something that, the U.S. cannot afford to have happen. They want to keep the House of Saud, where obviously all oil is bought in U.S. dollars. That policy was put together not only during Bretton Woods, but something they called the House of Saud, which involved Saudi Arabia over 50 years ago. And that's very important. But it could also involve the SWIFT system as well, because China has launched a new central bank sort of digital currency. I wouldn't quite call it that, but an electronic trading system outside of the SWIFT system. So it could also involve that there were things going on underneath the hood that we're obviously not hearing about, that China was getting ready to, they're the main buyer. China gets their oil from Iran and from Venezuela, and it could have been coming where they were getting ready to no longer buy crude oil via the US dollar, but doing it directly by purchasing either in gold or even with the yuan, of course, and doing those purchases through this new electronic system, which would then circumvent all the financial institutions making profits over here in the US. So trust me, there is a lot politically going on here. Now, I think that's going to be important, not just Venezuela, but, we're now coming into old Oswald Spengler territory. I don't know if you've ever read The Rise and Fall of the West that he wrote back at the turn of the century, but it's all playing out here, especially as we look at this idea of 300-year cycle and the ending cycle of democracy, where we get into this idea of late-stage democracy. And this is all part and parcel of what is ongoing. And it just is the way cycles work. So we need to look, obviously, now where we're kind of seeing this division between the West and the BRICS nations, or if you want to say the East. I don't really call it the East because it still involves, but it's kind of the other side south of the equator. And obviously, it's kind of this battle between the BRICS and between the West, face it. And Europe's got a massive amount of problems. I mean, we look at Germany. I want to look at Germany here in just a moment. We look at Germany, and because Germany, obviously, with the problems in Nord Stream now, not having cheap energy anymore, there were inklings ongoing of that, and they could be in deep trouble. So this all could start with ripple effects in Europe and play out even now with potentially inklings around Taiwan, because Japan owns islands just offshore, subsea, some of those just offshore of Taiwan. And they've already said that they are not going to want to see, if they see an attack on Taiwan, we could see Japan get involved with launching missiles from their own territory. So that would involve, you cannot have the carry trade on wine, which would involve their stock index, because that would massively impact the entire Western stock market. So we want to watch all these things. So in other words, here we're looking right here at the Japan model. And you can notice that back here in the early 1990s, we had this rising V channel here. You see it? But price was kind of trading sideways. So this rising V channel kind of held price up here, right? So eventually price had to come across, and you notice the really nice kind of formation we've got right here of the velocity draining. And you notice at velocity draining, that's where we had the 2000 sell-off here. Now this is the Nikkei, but notice obviously the SPX sells off with it because the two are hand in hand. And then you notice here in 2007, the bigger sell-off here in the Nikkei, and again, there's the other corrective move. But these corrective moves, as we worked across, you could see these corrective moves happen because velocity was pulling it down. And then as we came out of the 2009 lows, velocity began to start to build up. But what's more important is you notice as it came down, it didn't continue up. It's kind of stalled out here. But velocity is going to have to roll over. But what's more interesting to me is that price had to come right here. It had to work its way over back here into this momentum channel. I call this the V channel, or the velocity of momentum's channel, because this represents the velocity of the momentum of this entire structure. And you can see that the momentum topped out here which was back in 2013, 2014. But what I found out over time in my research, and obviously much back testing and understanding the rules of the algo, is that it takes time. And I've made big mistakes and I've corrected all that, and I fully understand all the data flows right now and understand this time component to the momentum, because we're looking at momentum-based trend flows, more so liquidity, velocity, momentum of these trends. And that is what I do. It's completely different with how anyone else looks at the market, and it's something I've developed, if I told you in the past, over a period of about 16 years. But you can see now that the momentum topped, and as the channel started to come down, we had to have the price here. So you can see actually we were only now at the low in 2020, we were just starting to enter the channel. So we had to go up into it. But notice now that we've broken out above and we completed this hit all the way up here on what I call the black line. And notice this kind of stair-step pattern to it, right? Up, stair-step, up, stair-step, up, stair-step, up, stair-step. So what we want to watch now, if this now breaks down, it could come down just to maybe here, which obviously would not be good because, you know, this is pricing right here to the 2022 low. But the first move could be where this comes down here in 2026 and we get a really big head and shoulder formation here. And we'll talk about that more. So it's not just going to collapse, right? But my feeling is it's probably going to come right down into here in 2026, and we're going to see a head and shoulder formation in Japan. And then, of course, after that, it's then going to collapse. But for that to happen, the trend needs to move down. So when we're looking at Japan, I really feel that Japan's going to play into this. We'll look at the U.S. in just a moment. Now let's go down here a little further, and here is another. Let's look at another model of Japan right here. You can see Japan all the way out of 1970. Okay, here we had our first signal low. You notice both signals together. We had a first signal high up here in 1990. And then notice the signal running all the way up. Now this signal has turned over. It has come together, focused, and rolled over. That could definitely be signifying a major top in the Japanese market. So we're going to be watching this. And it has rolled over. And that's going all the way back to that rallying up. Now let's take a look here. I want to go over, I think, to Germany next, because right now that's all I want to show here that we really need to look at. Is there's other models I'm looking at that, but that's really all we need to worry about at the moment. I showed some other models here. Hang on, let me find this. Germany. Here we go. Here's Germany, right? So let's look at Germany, and then we'll go into the globe. So here's Germany, right? Here's Germany in the 2009 low. You see the corrective move here. Nicely, it stayed completely in the V channel as we've gone forward. You can see the red line is the SPX, and the blue line the blue line is Germany, and the red line is the SPX. So you can see how Germany has stayed. Every time it's come down and tested, it's come down and tested, it's come down and tested, but it's remained in this channel rising. But you can see how for months after months, almost all of 2025, look at that pattern right there. I mean, that's incredible. That right here is the start of 2025. And look at all those candles just trading sideways here, right off the top of the model, which is the pink line you see up here, which is the momentum of the circulation. It can't get above that, okay? It's not going to go above that. That's not going to happen. But obviously, it hasn't broken down because you see the velocity has continued to build up. The trend bars have continued to build up, and that's holding price supported. So I'm going to be watching now. We see already a trend bar breaking lower, and if we get a breakdown in the velocity, that is going to be the start of Germany's fall. And we can see right here, you notice the trend breaking already aggressively here, and the velocity beginning to roll over again. So this has a setup very much like the top in 2022. You see it? Velocity coming out, the trend breaking, and of course it all coming down. So it's set up right here. Germany looks ready, looks topped out, looks ready to go. And then if we go over here, I want to go one more model on Germany. We see the same idea as we saw in Japan. Signal top, you notice one signal here in 91 at the low, and this entire complex looking signal, a lot like we saw in Germany, has come together, focused, and rolled over. So we could be seeing a major top within the overall structure of the West. But it's not just the West that's topping out. And we're going to go into that. So let's not look at the U.S. I wanted to focus on those two markets. I've got the US models in here. We made some predictions. Here's the 2009 move. And what we've done is we've laid in how big the 2009 move was. You can see right here, this blue line. You see this blue line right here? This is very important to price. It's a moving average, and I call it the gate controller, and it works in combination. So you see what happens here is, of course, you're going to have the break in the V channel, and you can see the V channel, which is always represented in pink and blue. You can see it breaking here. You can see it breaking back here in the move down from 2000 to 2003. And this is the US. So you can see this V channel breaking down as the market rolled over and then came down on that first corrective move. Now, right now, you can see it's just kind of hovering here. And then again, you even see the break here, right? You see the break here in 2022. So we're going to want to see this all roll over. The flows down here are pretty negative. And then once this all rolls over and this starts to move down here in 2026, that then puts, is it going to be a bigger move like the 2000 to 2009 move? If it is, then this will be reflective of how much price moved and how long. So the directory, if you had a 2009 like move, that could put a low in early 2027. If you had a corrective move like 2000, that could take a couple of years. So we're in no crash scenario here, right? We are in a topping scenario here where things have to happen, and then once that happens, we'll talk more about how that will unfold. Now, I want to talk a little bit about the BRICS because, I think it's going to be a very important theme this year because of what I discussed earlier on. And here's Brazil and India and China. We're not including Russia here. I'll show you model Russia in just a moment. But you can see that we've had, that they were the first to top out. So it's actually the BRICS that topped out in 2021. It started down, then we had the 2022 corrective move. You notice the BRICS bottom with the bottom of the S&P. S&P went up. But what's important is you notice that the S&P is now overvalued to the valuation of the BRICS. And the BRICS looks ready to roll over again. You notice that we are above the V channel, which is between here and here. This is toppy looking. So we're going to be watching. That's an overall BRICS model. We can see Russia here, and what I want to show in these three models. You notice over time, going all the way back here to 1999, how Russia was trading up here, right? So Russia was expensive while the U.S. was cheap, and now both Russia and the U.S. are priced together. So none of them are cheap. They're all priced very high. And you notice that once we get this open signal go to close, price will then be able to drop below this line. So right now, Russia is hovering. And you can see Russia's got a topping signal already in place, and it is just hovering in place. Now look at Brazil, the same idea. You can see just like Russia, the BRICS are interesting. You can see how the red was always up here while America was playing catch up. Well, America's caught up, and it's actually priced now above Brazil. And Brazil is also needing to break down. You notice how it came up inside the V channel up here, right? Came up, rapid rise up here, then dropping into the V channel, rising up because we hadn't topped. You notice topping momentum here in 2021, and now Brazil needs to price down here. So Brazil is a sell. You don't want to own Brazil. Brazil needs to drop down here, and I have another model showing price on that. I could have put price projections into this report, but I just wanted to give kind of an overall picture. If you want price projections on some of these, get a hold of me individually, and be more than happy to share that with you. So let's finish off with China. Again, the same idea, right? Going all the way back here to 2000 period. You notice China in red here, trading up here, while the S&P played catch up. So the whole world now is caught up with each other, right? We're all priced up top now. The BRICS and America, the West, are all priced up here. But again, we can see the same idea. We see a topping curve ongoing here in China. China is kind of topping out here on momentum. The top out here on the signal. You notice China came down and has had a big rally back up. So we're going to want to watch now to see if China can break down. But again, we're looking at all of this stuff is showing that it is getting close to topping out. I don't want to get into commodities. We'll keep that as a separate report. Crypto we kept as a separate report. Let's look at finance, because the finance part of it is going to be very important this year as well. Now we're getting a bit long, so I've got to go fast because there's just so much I want to cover with you, but there's not enough time to really do all of this, which is kind of a bummer because I wish I had more time. I always need to break this into two maybe. But you can see finance. Let's look at finance. Here's finance, right? Here's my projection for finance in 2026. It's not going to be a complete collapse. You can see how it's all topping right up here. Here's the market. Here's finance. Here is our curve. Right now, as we end the end of 2025, we've got a top in the momentum in finance. You notice back here, out of the 2022 low, you see this red line. Look at finance still rising and pulling the market up with it. Here's our first big corrective move, overshot. You notice here, overshot to V, back up into V. And so 2026 is going to be a year where we're going to see problems in finance, and we're going to see a sell-off in finance, which is going to pull the market lower. So that's why I'm talking about a lower target here in finance. Now, it's not aggressive because notice this 48 low here. If we project that over to the midpoint of 2026, that doesn't mean the S&P is going to be there but finance is going to come down. The S&P could drop lower. I've got a target probably below this 45.35 for 2026. But I'm really not sure if it can be too much more aggressive. I don't think we're going to have a good sell-off, and we're going to put on a topping formation, but it's no collapse yet. You can see the collapse will come later. So we'll come down more likely, then we'll come back up into the second half of the year, and then we're going to work back down into 27. So it's going to be a process. It's going to take time. All right, it's going to take time. So I've got a lot of the models here I could put in. Here's the finance. We can see the finance is rolled over. Look how aggressive that looks. It's done. So finance looks ready to go, and finance is going to be really, really important to the overall look. Now let's go into sectors here, because I want to show you some things here in the sectors. I put a model up on oil services. We were talking about global energy, and we were talking about oil services here, global energy, because energy is going to be important too, but I want to spin that out. I got world energy in that, but I want to spin that out, and I want to talk about that in a different report. Now, what's going to be important here is fire. Okay, I've talked about the fire economy, and of course, they're the beast. Excuse me, which is finance, which we just covered, insurance, real estate, and energy. So I want to do an energy report, and we'll cover that part in that report. So we can see that finance is topped out. We can see the banks here. This is going to be a story in 2026. Here's 2026. You notice the trend right now is flatlining and ready to roll over. You notice the velocity is coming out. The banking looks ugly. Here was the big move down on the SIVB blow up, and we've come back up. But look at the velocity is coming out. Once this trend rolls over, we're going to see a major problem in banks next year. Excuse me, this year, 2026. So banking and finance look extremely weak. Insurance is starting to top out finally. You notice it rolling over here. The trend is breaking down. Insurance is topped, right? Here it is. Look, insurance is topped, coming down. Last time we had it coming down was the 2022 top right here. You notice? And we've now got a top in insurance. So we got a top in finance. We got a top in insurance. And that's the kind of stuff I am looking for. There's another model, but we'll look at that later. Now, housing is going to be important too. And you can see housing is already down here, and it is breaking lower. Here's our V channel. Here was our first big move down. You notice we came out of the V channel for the April 2025, and that could have had something to do with this rally. But I think this is a wave 5. You notice we came up, we overshot, and now housing is heading out. So the real estate sector, we have nothing but problems in the CRE area. I don't know if you follow the commercial real estate market. It's an absolute catastrophe. They can hardly give the properties away. And there's going to be a major problem with regional banks because they have not even haven't even marked this stuff to their books yet. And once they start to mark this stuff to their books, there's going to be serious problems. And that is coming. So we got to keep an eye on this. Home construction, we can see this very top here. We're topped out now in home construction at the top of velocity, whereas before we were still in it. We can see the trend breaking away and the velocity starting out now also in the home construction area. So real estate is ready to go. So we'll talk about the energy part of the fire in a different report. And I wanted to get more into it. I want to talk 10 stops. I wanted to talk yield bonds. Let's go to yield bonds real quick because it's one other model I want to finish this report off with, and then let's close it up. I'm watching the China bond market. We're above V. China bond market is ready to collapse as well. That's not going to happen right away, but China bond market is all set for a move lower. Look at this on the yields. This is the lowest the yields on the S&P ever were back here. And now we're all the way down here. There's absolutely no value. There's no yields that pay for holding stocks at this value. Now, you want to buy stocks when the yields are high, right? So you see here, this is a great buy. And back here, this is a great time to buy stocks. When yields are down here is when you want to sell, okay? And we are down here. You notice this was our first move in 2022, and now we're even lower. This is the second lowest yields in history on the S&P. The yields suck, okay? And that's going to be a story because I want to watch the yield model. Yields rise. You notice there's this big rise in the yields here. First rise, first corrective move in 2000. Then it came back down. And then we had another rise for the corrective move in 2007. So yields is another way we're going to look at the market. Now, let me finish off with my confidence model because this is going to be key. Now, the confidence model is a bond-based model. I've got some other bond models. I'll probably do a separate report on bonds because we need to talk about bonds. So we can see that the V channel is down here, but we're still holding here. You notice the trend? When the trend breaks, we're able to break below. When the trend breaks, we're able to break below. So we need to see here. We've got a signal finally in the confidence model. And this is really important because this is bond confidence, right? And you can see here's the bond complex. You see how back here in the 2022 move, the bonds came down? All these represent different bonds, right? So we're looking at the corporate bonds, we're looking at the Moody bonds, we're looking at the real estate bonds, we're looking at the inflation adjusted, all the bonds. But look at all the bonds now with the confidence model all clustered up top here. The highest they've ever been are back as high as here, and confidence is at a record all-time high. I could take this back in time, and confidence has never been this high. So we're going to have to see the confidence model break down. It's got a lot of work to do before we can talk about a bigger move lower in the market. Right now it can come down and test here, but this trend is going to have to erode fast. So I want to be watching that model as well. We didn't get time to get into the key internals, the key signals, but we'll be using those in some future reports, okay? There's a lot of signals here I wanted to share with you, the data signals and that sort of thing, but we'll do that another time. So I'm out of here. We're going to get too long on this video. It's already too long-winded. It's not giving too much as far as what I would have liked to put into it, but we'll have some other videos to cover some of these other areas. I just wanted to give you some of my thoughts about this idea. I really think it's going to be about this battle ongoing between the BRICS and the West. I really want to be watching how this all develops. We're looking at the emerging markets as well. We're going to be watching Europe closely, watching Japan closely, and obviously we want to see what's going on within that because it really is going to be a play off each other. We're heading into a very much an economic war here. And the salvos are being fired. There's no question about it. Have yourself a great start to the new year. Best wishes to you and your family. Great success this year. Follow along. I'll get some trading reports out. I share so much of this info on the Discord site. I can only do so much on these videos. I'm out of here. Thanks for tuning in.